Hello and welcome everyone to today's metals report for the 20th of June 2018, presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we will be doing a review of gold, silver, platinum and copper and some of the trade opportunities that we see lining up at the moment. So what do you need to know about the metals on Wednesday? First of all, platinum has broken down to two-year lows, which we'll have a look at very shortly on the charts as we're coming back into major support. Gold has broken down to 6-month lows and copper at the moment is trading at 3-week lows. One chart I do want to have a look at today with you as well is the gold to silver ratio and how you can use that to effectively gauge when there's potentially a turning point in silver prices, because the gold to silver ratio has had a reversal over the last few days following on from last Wednesday's FOMC statement, and we'll have a look at that more closely in terms of an inverse correlation which can help you to pick a potential bottom for silver prices. So we'll take a look at that shortly on the chart as well. So first of all, if we go over to copper, we actually mentioned this on the week ahead commodity report that we were looking to re-establish a sell short position. We in fact did that at the beginning of this week. We've now hit our profit target on copper. We've in fact come all the way back down to major support here, and the swing low is really going back to May, so we've had a really nice sell short. This is actually the third sell short position that we've taken on copper over the last week, so it's worked out really well for us. After copper broke out to 2.5-month highs, we've seen a significant correction, and essentially copper has given back all of those gains. It's now broken down over 3% so far this week, but it is getting back into support now, so I'm reluctant to execute any additional sell shorts at this level. Although we might have a little bit more downside, we could see the price come back towards the monthly pivot here, but at the same time we've got a lot of support on the left of the chart here, which you can see where we've had several bounces of late going back to the recent swing lows of May here. So copper right now, we've now banked our profits on the sell short. Now moving over to platinum. Platinum has done exactly what we wanted it to do here, which is break back down to the lower Keltner channels, which we're testing at the moment. In fact, we're just about breaking through $860 per ounce at the moment. We're retesting that zone, and this morning we broke down to $859.40 here. The next major level I'm looking at the moment resides at the monthly pivot, which sits at $853. I suspect this is going to set up for a V-shaped reversal, capitulation move higher soon. We're just not there yet. And what I mean by that, if we have a look at, for example, actually a really good example just in terms of price structure is probably just having a look at the softs at the moment. If we look at soybeans, for example, this is a sort of capitulation move that I'm looking at the moment for platinum to form. So after we see a sell-off complete, we often get these capitulation candles as we're seeing on soybeans at the moment, and you see this big reversal in the market. I don't think we're quite there yet on the metals where we're at the point where we've got the capitulation move, so possibly we'll break back down towards a monthly pivot, then we'll get a rejection candle form, and that would then likely signal a low. But at the moment I don't want to catch a falling knife on platinum. If we go over to the weekly chart, we have so far taken out the 2-year swing lows here, so we've broken back below the 2016 lows as well. This is a weekly chart, so the price structure could change into the close between now and the end of the week. We might be able to retrace and then see a potential reversal. If the price keeps going lower here on platinum, I would anticipate we could actually come all the way back down towards $810 per ounce, which will be the January 2016 swing lows. That would be about another $50 move lower from where we are at the moment, or a 500-point move. The key levels I would look at on platinum at the moment reside at $852 per ounce. We'll see whether we do hit that level and whether we bounce from that zone. If we do continue to follow through to the downside, I would then look at the next major layer of support between approximately $800 up to $828 per ounce. So just waiting for the price to come to us at the moment, and then looking to re-establish a long position from a very oversold condition. And also the gold to platinum ratio is one of the most extreme it has ever been relative to gold. Platinum is the cheapest it has ever been. Now moving over to silver, there's a few points that we need to be aware of. First of all, silver broke out towards 2-month highs last week after the FOMC statement, before we've seen a complete reversal, very much like copper as well, which has given back all of the gains that we saw in the lead up to the FOMC statement. Silver has also done the same. So on Friday we saw a considerable move to the downside, over 3% decline in prices for silver. So far this week silver is down 1.7%, and in actual fact it's all the way back down to support here, which resides around $16.25 per ounce. We have taken several positions in the past at this level, at $16.25. Right now, the price structure does look a little bit vulnerable, that we could see a further decline in price and actually come all the way back down to retest potentially $16 per ounce, which is the next key level of support. If we see follow through today, we have a little bit of support at $16.25. This is where I want to bring out the gold to silver ratio so we can have a look at this in terms of an inverse correlation. Now, this is the gold to silver ratio, which typically moves inverse to silver prices. What you need to be aware of on the gold to silver ratio is historically when the ratio has hit 80 to 1 or higher, which is the level that we reached over April, where we breached above 80 to 1, that is typically from a inverse correlation point of view, that is a great time to look at establishing buy positions on silver when the ratio gets over 80 to 1. What does that mean exactly? Well, essentially, when the gold to silver ratio gets to 80 to 1 or higher, that would mean that 80 ounces of silver would buy you 1 ounce of gold. That is quite extreme for the ratio. Over the last 3 years, the gold to silver ratio has retested 80 to 1 approximately once every 12 months, and that has provided a really good buy opportunity to get into long positions on silver. And if we do see a reversal on the gold to silver ratio, which is approximately sitting at 78 to 1 at the moment, it would indicate that the correction on silver is over and silver would get supported where it stands at the moment above $16 per ounce. However, if we break out of this resistance and the gold to silver ratio moves back towards 79 to 1 and even all the way back up to 80 to 1, it would suggest that silver is going to go lower. So we're really at a decision point at the moment between now and the end of the week as to whether the gold to silver ratio will essentially break out and then provide more downside for silver, or whether we're going to see the gold to silver ratio roll over, which would indicate that the low is in for silver. Now, finally, moving over to gold, as we suggested on the week ahead commodity report, gold was still looking vulnerable here for another corrective move lower. Gold is now trading at 1,271 US dollars per ounce. It looks like short term it wants to go lower. The next major levels of support here reside at 1,267 US dollars per ounce. A level that I'm looking at for a reversal point resides at 1,262 US dollars, and then the next key support is $1,258. So it's approximately about a $10 to $15 move from where we are at the moment. It could still get supported above $1,270, but if we do take out that level, if we break down below the weekly pivot, we're likely to see more follow through to the downside. And certainly at the moment, support is not coming in for gold at this level. We're not seeing 1,270 US dollars provide much support here. Again, going back to the gold to silver ratio, which is currently sitting at 78 to 1. If the gold to silver ratio starts to roll over and sell off from this resistance level, it's likely that gold and silver will start to get supported and will start to get a bid. On the flip side, if the gold to silver ratio breaks out between now and the end of the week and we move back towards 79 to 1 here, that would indicate the selling is not over on gold and silver, and very likely we would continue to see pressure to the downside until we come to the next major levels of support, which you've just highlighted. If you'd like to find out more about our training services at the Gold and Silver Club and access our custom-built market data and news trading platform, there is a link below in the description to this video where you can get a 1-month free trial of our news feeds. And of course, if you'd like to join us for our live trading rooms, all you need to do is go to www.jointhelivetradingroom.com. There is also a link below this video in the description. If you enjoyed today's commodity report, make sure you hit the like button and also subscribe to our YouTube channel so you get kept updated with the latest reports.